Welcome traders to this channel. Now we will have a very short analysis on gold for the coming week. Keep watching till the end as we'll predict gold's potential move in the next few days. So, first, look at the daily time frame. Gold has been trending up since the end of December 2024, with a fib level reaching -4, and falling down to -3 after President Trump's tariff announcements. The price was moving in a channel, but broke out of the first channel, moving to the new channel created after the president announced a 90-day pause of the tariffs for countries except for China. Let's zoom down to the 4-hour chart to view the recent price action. Currently, gold has fallen down after a very strong bullish rally bullish move, and has been ranging for at least the last 3 days of last week. When you look at the chart, the violet-colored zones are daily resistance, and the green ones are daily support areas, while the blue zones are demand areas and the reds are supply areas. So based on supply and demand or support and resistance trading strategy, we are now in a ranging market, meaning that it can both create a trending up or a trending down movement when the market opens by next Monday. As you can clearly see, there are 3 daily candles that could not break either the resistance above them at price $354, and the support below them at price $284. That means whenever one of these SNR levels are broken, it may indicate the potential move of gold in the next week. Shifting our focus to the 4-hour chart, we get a clearer picture of gold's short-term movements. After a strong bullish rally, gold has been range-bound for the last 3 days of the previous week. This consolidation suggests a period of indecision among traders, as they wait for fresh catalysts to determine the next direction. The key levels to watch in the coming week are the resistance at $3,354 and the support at $3,284. These levels represent potential turning points for gold's price. Support and resistance levels act like battle lines in the gold market. Buyers and sellers clash around these price points. The $3,354 resistance level is significant. It has capped gold's upward movement in recent attempts. If gold breaks above this level with conviction, it could signal further gains. A rally to $3,425, then a retracement to $3,245 is possible. On the downside, the $3,284 support level is a critical line in the sand for gold bulls. A break below this level could trigger a wave of selling pressure, pushing prices lower. This support looks weak. A break is likely. Section 4. Beyond the charts, the fundamental landscape. While technical analysis provides valuable insights into price movements, fundamental factors also play a crucial role in shaping gold's outlook. The coming week is packed with potential market-moving events, including 4 news days with 8 impactful news items. Of particular importance is the release of the non-farm payroll and unemployment rate data on Friday, May 2nd. These figures provide crucial insights into the health of the U.S. economy and could significantly impact gold prices. Strong NFP numbers could boost the U.S. dollar, potentially weighing on gold. Conversely, weak data could increase safe haven demand for the yellow metal. Section 5. Charting the course potential scenarios for gold. Taking both technical and fundamental factors into account, several potential scenarios could unfold in the gold market next week. Scenario 1. Upward movement. If gold breaks above the $3,304 resistance level with strong momentum, it could signal a continuation of the bullish trend. In this scenario, the next target for gold would be the recent high around $3,425. Scenario 2. Downward correction. Conversely, if gold fails to break above resistance and experiences renewed selling pressure, it could break below the $3,284 support level. This scenario could lead to a deeper correction towards the $3,245 level. Scenario 3. Range-bound trading. Finally, if gold remains stuck between the $3,354 resistance and $3,284 support levels, it could indicate a period of consolidation. Traders may wait for a clearer catalyst before making significant moves. In conclusion, the coming week promises to be an eventful one for the gold market. By carefully monitoring both technical and fundamental developments, investors can position themselves to navigate the potential volatility and capitalize on trading opportunities. Stay informed and trade wisely.